So quickly, so my name is Thomas. I'm a senior associate with Terralis. I've been working with Terralis for the past 5 years. Time flies. To give you some context, so I graduated from HEC Montreal. I did a master's of finance. So a very traditional background. Before that, I had an entrepreneurial experience in France, where I was the first employee of a company, and I had a bachelor in finance. And maybe, if I can start with that, at the time, to give you some context, we had much less people for, meetings to talk about venture capital. There was much less interest in the asset class in 2011. And everyone, doing a master's in finance wanted to work either in M&A or sales and trading. They didn't know yet that everything would be automated. So and so why did I choose to work for Terralis? First, I kind of took I was kind of contrarian. I was not contrarian, but what I wanted to do is everything is like very process driven. So or hierarchical. You go work for a bank or for a consulting firm. You work with very smart people, but it's kind of a military kind of way. So you have 2 years as analyst, 2 years as associate, and then you work your way up. And what I liked about Terralis is I just wanted to work with people with experience, people like Alan, and so that's to learn things that you don't learn at school and in books, and that people that have been in the industry for 20 years, 30 years, and with Terralis I had this great opportunity, and so I stayed there, and I'm lucky to be there, obviously. So today, I just want to talk to you about a few things. History of venture capital. So it's a big statement. It's just to give some perspective around the industry. Rise of venture capital. So what we've seen over the past 20 years, but very quickly again, where we are now in Quebec, Canada, and just the perspective from an LP at Terralis. I know that when you see the industry from TechCrunch or other news site, we tend to speak less about LPs, but they are very engaged now in the industry in Quebec, Canada. KES, the industry that we have today wouldn't be possible without KES. And not so long ago, companies like Hopper could not, raise big rounds like they did. So right now is a very good time to be more involved within the community. So history of venture capital, it's if we think about venture capital, we think about entrepreneurship, technology, innovation, financing, those kinds of words. But we always had, at least until 300 years ago, we always had innovations, and we always had people to finance them. And those innovations always, change the way the world works or people live. And that's why I just wanted to give you this slide to give you some perspective. It's from a book named Technological Revolutions and Financial Capital from Carlota Perez. And it's, we take a step back and we see that before having, Snapchat and smartphones, we had other kind of innovations. And so we had the Industrial Revolution, the age of steam and railways that changed also the way people travel in the transportation industry. Age of steel, electricity, and heavy engineering, age of oil, automobiles, and mass production, and of course, age of information and telecommunications that started around 1970, and with much less sexy kind of companies and products. So, and also feel free to interrupt if you have any questions, obviously. If we talk about venture capital, the way it's in history, so you always had people willing to finance innovations, and I don't know if you've watched the show, the PBS show, How We Got to Now, from Steven Johnson, and you have, I think, 6 episodes, and he talks about how, innovations changed the way people lived, and you always had, even in 1870, people willing to finance new innovations. So at some point was the watch, at some point was laundry. Everything seems obvious now, but it wasn't obvious at that time, and so I think when you think about venture capital, you always have to think about people willing to finance new ventures, new ideas. that are going to change industries or create new industries. And so this guy, so he's a French gentleman, Georges Doriot, is considered as the father of venture capital. He was a teacher at Harvard. And why is this important? It's because he taught a class at Harvard, and he was the mentor of three great pioneers. So Tom Perkins was the founder of Kleiner Perkins. I'm sure you all know Kleiner Perkins. They are an investor in Uber and many companies. Dick Cramlich was the founder of New Enterprise Associates, also a major firm today. They raised very small funds at first. Now they raised billion-dollar funds. And Don Valentine, obviously founder of Sequoia. And if you watch the documentary Something Venture that I think Eleanor advise you to watch, you'll know this story. And I think it's always interesting to get the story of an industry and to have a better perspective. So he founded kind of the first venture capital structure firm, made some investments, and obviously and made some money as well, a lot of money. So that he's an interesting character to think of. And if you look at the story of Silicon Valley, you can look at it from many different perspectives. I'm just offering one, but you see kind of the semiconductor industry was the start of how Silicon Valley was built, and those guys that are named the Traders 8 were working in a semiconductor company named Shockley, and they left the company and started their own company, Fairchild Semiconductor. And what you see in an ecosystem is you see at first a big company that is getting started, bright people and a lot of talent, not enough diversity obviously at the time, but a lot of talent, and then those companies succeed, and then you see people from these companies leaving and starting other companies. And that's what happened with Fairchild, where you have Gordon Moore, Robert Noyce that went to start Intel. At the same time, you had Hewlett-Packard as well, and many companies were kind of small spin-outs of Hewlett. Eugene Kleiner became a venture capitalist. So it's always like that in an ecosystem, and maybe later we start to see a lot of entrepreneurs in the Quebec ecosystem who started company, had success, sold their company, and now involved with new companies in new sectors. So Jean-François Gagné from Elementia is one example of that. He had a company named Planora and financed by Real, and Real Ventures then sold the company, now comes back as an entrepreneur to start something much bigger. And we have many examples like that. And after Mike will have some success with his project at Hopper, he started a new company in a much bigger way, or became a venture capitalist. So if you see the first successes of the Valley, so Sequoia, Kleiner, and NEA are funds easy to think of, but Atari, Cisco Systems, Apple were all financed by Don Valentine. At the time, they weren't raising Series E kind of rounds, and the valuations were much smaller. So Sequoia made terrific returns on those investments. Kleiner financed Genentech, NEA, PowerPoint, that was acquired later by Microsoft, and now and another company named Juniper. So it's just to give you some ideas. So the rise of venture capital, it's if you look at it, we've seen huge innovation starting in 1970, and this trend continued until the famous bubble. But what you see is whether you are in an up cycle or down cycle, you always have companies being built and getting started. And it's just the idea I wanted to convey. So even if you have less money in the ecosystem, less capital for companies to finance themselves, you'll see great companies getting started in every kind of business cycle. So Uber is a good example. They were started in 2010. I don't have them here, but it's always like that. And now Snapchat did an IPO. Airbnb was started in 2009 after the financial crisis. So there's no right moment to start a company, and time is the friend of good companies, and good companies get even better in tough times. And now, that's right now. It seems like a lot like in 2000, we have a lot of unicorns kind of companies, a lot of Series E, Series F, Series Gs, and those companies will go public someday. Some of them will die. That's part of the cycle. So you have companies with a lot of success and some companies that don't deliver up to expectations, but that's part of the venture capital industry. It's very risky. That's why when you're an entrepreneur, it makes a lot of sense who you partner with to finance your companies. You need to partner with people who are dedicated to the industry, who have a long-term view, and who are, have kind of this operational expertise to help you, to guide you through the tough times, and not just, financiers who will just speculate and finance your company because it's the right time to make money. And that's something very important when things get tough. If we look at the, just the Quebec and Canada industry, so I took the CVC numbers. They're not perfect, but I like the map. So the real number raised this year was closer to $3.7 billion Canadian dollars, and that's not unprecedented, but it's a record year for the industry. We haven't seen that for almost 10 years, and why is that good news? It's good news because we have right now a thriving ecosystem. We have entrepreneurs able to finance their companies with local VC players. You have at the seed stage with funds like Real Ventures, when they grow and when they raise large rounds with Caisse de Dépôt. And that's a good news because first, the risk is shared between local firms and US firms or international firms who also bring their expertise to work with local players to build companies. And the value gets built here, which is good news. That's why you need that in order to have a thriving ecosystem. If you have a company that is getting bought for $50 million, it's a great outcome for an entrepreneur, not always for an ecosystem, because the entrepreneur is going to work for a much bigger company and serve the interests of this company. Whereas if you can finance the company locally to keep of course, a global mindset and a global strategy, but it helps the local ecosystem. So yeah, and we didn't have that also, 10 years ago, 20 years ago, where VC funds in Quebec were very different from today. They were more financially driven with less operational expertise, and also, very insular in the way they looked at things from a strategic standpoint. So if you have a company and your only market is Quebec, that's not enough. And that's the same thing for a VC fund. You need to be able to be recognized locally, but also in your country or in North America, in order to attract the best companies, the best entrepreneurs, and the best opportunities. If you look, so a few transactions. So the first one, Blue Rock Therapeutics, is a life sciences deal by Versant, a fund we invested in. But you see a lot of Canadian leaders emerging. So you have Thalmic Labs, for example, based in Ontario. Zymeworks, based in Vancouver, life science company. But Hopper in Montreal. Blockstream, also a company. So Blockstream is a bit misleading because the company was at the seed stage 2 years ago. So they're raising a lot of capital. They're building something obviously very disruptive, but it's very positive for Montreal. We didn't have that 10 years ago. And so if you look at the ecosystem in Quebec, who are the major players? So at the angel and seed stage, you have all these players. Foundry obviously, the accelerator program from Real, Espace CDPQ. Mike just mentioned it before. Brightspark also working with angel investors at the seed stage. And you have many more players than before. Early stage, I just put a bunch of IT funds and clean tech funds as well. Later stage, we have, you mentioned it, venture capital versus private equity. It's not always clear. NovaCap, for example, is a tech buyout fund. They'll do tech buyouts. It's very different from growth equity rounds, but it's tech, and it's more private equity in this case. And of course, limited partners. So Caisse does fund of funds, later stage rounds, Fonds de Solidarité, the same, Investissement Québec, the same. BDC tends to do also some direct deals, but they are also a major LP, and the ecosystem, the whole financing chain is, you want to have a chain that works, so you need different skills at different levels, and that's why you have LPs, early stage funds, late stage funds. Just what I wanted to highlight. And of course, some companies in Montreal, so Luxury Retreats got bought by Airbnb. Lightspeed, it's a great company as well. Coveo, Breather, that just raised a round this year. Sonder, that a company you might know of. And of course, Element AI, that just got started recently. And now the LP perspective. I just wanted to give you maybe more background on Churliss, what we do from the LP standpoint. So we are kind of the money behind the money. We invest in, so we are a specialized fund of funds, which is different than KES. We are, of course, much smaller, much less capital, but our specialty is not to do direct deals. We do we have some investments in direct in companies, but we are a fund of funds, and our job is to identify the best fund of funds and try to work with also emerging managers and help them, go to the next step based on a few investing principles. So we tend to invest mostly with early stage managers. That's around 70% of our portfolios, mostly in IT and life sciences, and our main market is Canada. So we invest also in the US, in Europe, but we also invest in Canadian funds who have strategies outside of Canada, but our main market, our main focus stays Canada, Quebec and Canada. So that's the team. We are a dedicated team dedicated to venture and fund of funds. Just wanted to highlight that to say there's no path to work in a fund of funds or in a venture fund. Jacques is the president, obviously managing partner. He's an engineer. Eric has a more finance background. Cedric is a doctor. Julien is an engineer as well. So Sarah has a legal background. So we all have different backgrounds, and in a team you need as much diversity as possible in terms of background, what everyone brings to the table. And those teams tend to have a 360 view on problems and how to solve them. Of course, so I mentioned that Churliss wouldn't exist without the support of Caisse de dépôt, Fonds de Solidarité, and EQ. Our last fund was a $375 million fund. We have many investors, private investors as well, Banque Nationale, BPI-France, who's a French public institution, Fiera Capital, and also strategic investors. So we didn't have that as well 10 years ago. Now everyone, private players are interested in the asset class, and they know that a company knows that if they want to grow, they have to participate in the local ecosystem, and that's the same for even for financial sponsors like banks and asset managers. So the 6 principles I talked about earlier. So we look at, of course, when we invest in a fund, at the returns. We want to see the track record that differentiates goods versus less good funds. It's very important when you look at transactions, when you are an entrepreneur working with a VC fund, but also when you are an LP investing in a VC fund, you want to make sure that you have a strong alignment of interest between GPs and LPs. That means that you want everyone to make money at the same time and to lose money at the same time. You don't want to be in a situation when you invest in someone, and if you lose money, they make money, because that misaligns everything, and then it destroys relationship. Of course, optimal fund size. So it's very important when you build a venture portfolio, to have the right number of investments and the right amount of capital to finance your companies down the road. Don't forget that a VC fund has a 10-year term. Of course, global reach. We talked about it. Operational expertise as well. You need an investor that is able to provide value and help you grow to the next stage. And access to corporate sponsor is also a big plus. If you have relationships with Microsoft, Uber, Videotron, whatever the company, it helps if you want to sell some of your companies. It helps if you want to have insights on the market you want to invest in. So that's our portfolio. So basically a lot of Canadian funds. That's the IT portfolio of the first fund. but you can see that on our website as well. So that's our last fund. We invested in IT life sciences funds and some. We made also some direct investments. The last part I wanted to touch on is, as a fund of funds, we are of course a fund specialist. So we are not, direct investing is not our specialty, but we tend to partner with the funds we invested in to place some capital here and there and allocate it. So we invested in luxury retreats that got sold to Airbnb with Inovia, Lightspeed as well, It's Entire, and recently WorkFusion in New York with Georgia and Inovia. And so that's the end. I'll open it up to questions. If you have any questions, obviously, if you need advice, be more than happy to reply. That's my email, so you can cold email me.
Well, guys, folks, I should say, one of them. Wants to start? I can break guys.
It was easy.
You talked about the importance of global reach for startups, but also for VCs.
Yeah.
But we also have sometimes that contradictory message that VCs need to act locally or investors need to be rooted in their community. Is there does both come together, or for you there's friction with those two objectives?
No, actually, it's the two sides are true. So you need a fund that is that has a geographical presence. So because if you want to see your entrepreneurs, you need to be close to them. You can't invest. If you invest in Asia, you're based in Montreal, it's very hard. You can do 1 or 2 investments like that maybe sometimes, or in Europe, but it's hard to follow them through. So you need to have a local impact. But what you need to do as a VC investor, you also need global ties with other VC funds or other companies, because if your companies need to more financing, it helps. Real, for example, has relationships with Sequoia in the Valley, RE Ventures in New York, funds like that. That helps. When Breather is not at the seed stage anymore and they are at the growth stage. You have those relationships. It's a people-driven kind of business, so it helps to make intros and make sure the company has the right partner at the right time. So that's what I meant when I said global. Yes.
So when you invest in a fund, like when you were displaying your portfolio, it showed the fund you had presumably invested in and then the company that you were invested in within that fund.
Yes. So
do you choose the company you're investing within the fund, or do you kind of sacrifice your discretion?
No, that's a good question. So we invest in the fund, so we are in for the fund for 10 years, and oftentimes much more than that. So 10 years, and then they build a portfolio between 10, 20, 30 companies, and the co-investment allocation we have is to double down on winners. So if we see, we try to invest with them in their top 2, top 3 companies at a later stage. So we wouldn't invest, for example, with Real in Breather at the seed stage because it's too risky for us. But if Breather raises a larger round later on, that could be financed, either by a local player like KES or USVC like Menlo Ventures. That's what happened. We could just put a sum between $2 and $5 million just to allocate our capital, increase our return, and increase our exposure to winners.
Okay. And then over that 10-year timeline, what's the attrition rate of companies? Like when do the losers become losers generally? After 2 years of the company still going, is that pretty promising? After 3 years, it's more promising. 4 years, at which point are you more confident in the company?
For us, it's a bit like KES, but we don't lead rounds, so you need strong metrics. What I mean by metrics is revenue. So if the company has a good growth rates, a certain threshold of revenue is at least break even or close to profitability. We don't see many companies like that today, but it's a good opportunity. The risk is mitigated. You tend to. The only risk we want to be exposed to is the financial risk. So if the company doesn't deliver, or the operational risk, if the company doesn't deliver up to expectations in terms of sales, revenue and financial performance. But we won't expose ourselves to a technological risk. So, for example, we won't invest in a company that doesn't have a product. So we track those companies. We've been around for, Theralis was created in 2009, but Jacques, Eric, and the team, they were in this industry for the past 20 years. So they know funds, companies, and we have portfolios that we manage. So portfolios since 2000, I think. So we have a good overview of the good number of companies that we can, analyze and look at. Yes.
You mentioned sometimes there is issue in the relationship between VCs and LPs, especially when one makes money and the other doesn't.
Yes.
Could you give not example of with names, but just kind of could be conflict of interest that can happen between a fund managers and LPs.
Yes. So you have, when you sign a term sheet as an entrepreneur or a LPA as a VC with an LP. At first, everything is perfect. It's kind of a honeymoon. Everyone is excited to partner with the other side. The only thing you want to make sure when you are an LP is you want to make sure that the interests are aligned. And when I say interest, I mean you want to make sure that your interests are the same as the fund. It's because the fund's going to act in its best interest. That's normal. But you want to make sure that the interest of the investors, the LPs, are well aligned with the interest of the investor, because it's going to work for the fund. It's going to work for its interests first. So it's just about aligning, making sure that it works for everyone. And with the company, that's the same thing. We talked a lot about unicorns, but a lot of unicorns have toxic terms. What I mean by toxic terms is that, okay, you have a $1 billion valuation, but if the company sells for less than $200 million, for example, the entrepreneur will get nothing. But maybe sometimes at some point, an investor will have the incentive to sell, even if it's just good for the investor and not for the other parties around the table. So when we want to align in interest, we want to make sure that everyone makes money and moves in the right direction at the same time.
You said you invest, in your portfolio, you have some IT, some clean tech, some life science.
Yeah.
What is your perception of Montreal ecosystem? Where is it directed? And then is it important to keep that diversity of investments? Because we've been talking at Further Ventures a lot about, more IT, digital AI, have impact on 25K, but there's much more than that happening. What's your take on that? What's the Montreal scene on those different sectors?
Yes. So in IT, I think we are now at the right level. So at Chalice, we pushed for that for many years. The fact that you needed to have a seed stage fund that finance a lot of companies a year, an early stage fund that will finance them through Series A, Series B, and later stage players like KES that will continue to finance them. And you wanted to make sure as well that every player, and Mike mentioned it earlier, you want to make sure, even if you're KES, that you have billions of dollars. You want to make sure that if your company raises the next round, you can attract a US investor that will partner with you to take it to the next level. And so IT, in my opinion, we are at the right level now. It shouldn't be below. I don't think there's too much money. You'll always have companies that are overfinanced a little bit, some that are underfinanced, but now I think it's kind of around the right numbers. In life sciences in Montreal, it's dynamic. I think we struggle with the seed stage in life sciences. And the company creation phase. And that's the opposite as in Toronto, for example. Versant Ventures, a life sciences funds we invested in, that is based in the Valley, has an office in Toronto, has many incubators, and so they have an incubator in Montreal in Simpson Ventures. So they are very dynamic at this stage, but they are the only one. And I think we saw something very interesting with Blue Rock in Toronto. We should see more deals like that in Montreal. Maybe not in the same 200 millions, but more company creation happening. And in clean tech, you have Cycle Capital, Enertech Capital, but clean tech overall, even in the US or in Europe, is a very tough space, very capital intensive, and it's hard. Investors got burned, and now everyone is kind of a bit more fearful.
It's your time, guys.
So I guess just to follow up on that, like where do you see the Montreal startup ecosystem going? Like I know AI is a very like hot topic right now, but is it like do you think it's just a phase, or is it like, you know, I just want to hear your opinions of where you think Montreal is headed to.
Yeah. So what we're seeing right now with AI in Montreal is very positive news. And if you look at Montreal and the Quebec ecosystem over the past 5-10 years, we tended to replicate companies, not replicate or copy companies, but we were more followers in terms of sectors and trends. And with AI now, and we have kind of the best researchers in the world. We have great researchers in Europe and in the Valley as well, but we have kind of the best researchers in the world in this field. So Montreal has the opportunity to become a leader in this field, which was not the case before. And I think the AI thing, and we don't know, and maybe Alan has more insights than me on that, but you always have, hype around things. So cloud computing was a hype a few years ago. Mobile AI, you'll see innovations over a long-term period. That there's no doubt about it. The thing is, right now, how do we articulate things to make sure that expectations are set, in the right way for everyone? But Montreal, what's happening right now? Montreal becoming a leader in some clusters like AI. We have Finance Montreal as well in fintech that is a bit less known, but also very active, with Power Corp being very active as well. Those are very encouraging signs for young people like you guys who don't know if you'll find the dream job in Montreal or not. I think now you have more opportunities to stay here and continue with a great career.
To follow up on what you said about like families coming back and big business like Power Corp, you see like all these big families being more and more present in the ecosystem, which is kind of how VC started. What do you think that will impact having all those big names or big, corporate families or foundations? Did that change? Is that competition for Teralis, or what does it bring to the ecosystem?
No, I think it's highly positive. It's not competition whatsoever for us, and it's I think you see more competition for deals in companies at this stage, but we are at our stage. We are very happy right now because we have funds that are getting the optimal size, and it was much tougher 5 years ago to make sure that you have this extra 20 million, 30 million from Power Corp or Manulife or Videotron for a fund. It can be small checks of 5 million from each of these players. But so we see that very positively, and because you have the capital first, but also the value add. So Power Corp has a lot of experience in the fintech space, insurance industry, and they'll help a lot of companies and funds in a way that was not possible 5 years ago. So yeah, if you have any more questions, if something comes to mind, don't hesitate to write me an email. Thank you.